Hey and welcome back to YT Finance. Do you want to know which stocks are hot right now? Well, listen up because I have some exciting news for you. Top Wall Street analysts just released their latest strong buy ratings for these stocks that are poised for massive growth. And the best part is, these stocks have a significant upside potential. Right now go and obliterate the like button to know more stocks that I am buying, comment down below your favorite stock to buy, subscribe for more videos on the best stocks to buy now, and without further ado, here are today's top stocks. But remember, before you add any of these stocks to your portfolio, make sure to do your own research on these stocks before making an investment decision. First up on our list is Uber Technologies, with ticker symbol UBER. This innovative company provides not only ride-hailing services, but also food and package delivery services. And guess what? 18 top analysts have recently rated this stock a buy. But wait, it gets even better. Just yesterday, Wolfe Research analyst Deepak Mathivanan reiterated his buy rating on Uber stock with a price target of $45. Can you believe it? That's huge potential for growth. And if that's not enough to get you excited, the consensus 12-month forecast of top analysts on the stock indicates an upside of 35.4%. Wow, that's incredible. So, if you're looking for a promising stock to invest in, UBER may just be the one for you. Don't miss out on this amazing opportunity. Ladies and gentlemen, buckle up because we have another exciting stock to talk about. It's Aspen Aerogels, with ticker symbol ASPN. This innovative company specializes in manufacturing aerogel insulation that is used in the energy infrastructure and building materials markets. And guess what? The news just keeps getting better and better. Just yesterday, analyst Alexander Potter of Piper Sandler reiterated his buy rating on ASPN stock. And even though he lowered the price target to $24 from $33, the future still looks incredibly bright for this stock. But that's not all. The stock's 12-month price prediction, based on the consensus of the top 3 analysts who gave it a buy rating, implies a massive upside of 176.3%. Can you believe it? That's a huge potential for growth. So, if you're looking for a stock with incredible potential, then ASPN might just be the one for you. Keep your eyes peeled and don't miss out on this amazing investment opportunity. Hold on to your seats, because we've got another exciting stock to talk about. It's Pure Storage, with ticker symbol PSTG. This amazing company is a leader in developing all-flash data storage hardware and software products, and the news about its stock is absolutely electric. All 5 top analysts who recently rated PSTG stock have given it a buy recommendation. That's right, every single one of them. And it gets even better. Just yesterday, Credit Suisse analyst Shannon Cross maintained her buy rating on the stock with a price target of $40. This is a stock that's really worth keeping an eye on. But wait, there's more. The consensus 12-month price target of top analysts suggests an upside of 39.6%. That's a lot of potential for growth, and it's clear that Pure Storage is a company that's poised for big things. So, if you're looking for a stock with a bright future, then PSTG is definitely one to consider. Don't miss out on this incredible investment opportunity. Our next stock is none other than Nutrien, ticker symbol NTR. Sure, it may be relatively new, having only hit the market in 2018, but that's what makes it so appealing. It's like getting in at the ground floor with this stock. And the potential for growth is absolutely massive. Why, you might ask? Well, consider this, the world recently surpassed a population of 8 billion people, and all those people need to eat. To make that happen, we need arable land, and to create that land, we need crop nutrients. And that's exactly what Nutrien stock provides. But wait, there's more. Nutrien has been actively growing and expanding its operations, which means there's plenty of opportunity for even more growth down the road. The company is even merging a fractured industry and expanding its e-commerce arm to make it easier than ever for farmers to feed cities. That's what we call forward thinking. But that's not all. Nutrien stock is also an incredible opportunity for passive income. The stock is currently bringing in $2.52 per share annually, making it a great investment for those looking to generate long-term growth and steady income. So, if you're looking for a stock with massive potential for growth, plus the opportunity for passive income, then Nutrien with ticker symbol NTR is definitely one to watch. It's already up 83% since it hit the market, and we're confident that it's only just getting started. Get ready to hear about an exciting company that might not be available on all brokerages, but it's definitely worth knowing about. Brookfield Renewable, with the ticker symbol BEP.UN, has a rich history that dates back to the 1800s. But today, they are at the forefront of renewable energy investing. Brookfield Renewable's strategy is to invest in a diverse range of renewable energy sources. With so much uncertainty about the future of energy, this company is well positioned to capitalize on whichever source becomes dominant. This makes it an excellent choice for long-term investors seeking diversified income streams. And the numbers speak for themselves. Brookfield Renewable has risen an impressive 282% in the past decade alone, and with so much money pouring into the renewable energy sector, the next decade could be even more impressive. On top of that, investors can enjoy a dividend of $1.79 per share. Keep an eye on this one. The next stock on the list is Lithium Americas, ticker symbol LAC. This stock is a great option for those looking for long-term income, as lithium is a key component of the future of renewable energy. Batteries are going to be in high demand, no matter what type of renewable energy we use, making lithium a critical resource. Lithium is already used in many everyday devices, from smartphones to laptops to electric vehicles. So, don't be fooled into thinking that there are no short-term and long-term opportunities here. Lithium Americas recently received a positive ruling for its Thacker Pass project, which means the company is now entering a new phase of growth. With shares already up 3,067% over the last decade, there is potential for this stock to reach those heights again, or even surpass them, in the next 10 years. Our next two picks are stocks that I own loads of, which is Amazon, ticker symbol AMZN. It's no secret that Warren Buffett is a genius when it comes to investing, and even he admitted that he was late to the Amazon party. But don't worry, there's still plenty of opportunity for growth here. Despite already having a massive market cap of $967 billion, Berkshire Hathaway added more shares to their portfolio in 2019. And with a current price-to-sales ratio of 1.9, Amazon is actually less expensive than it was back then when it had a ratio of 3.7. Why is Amazon such a great buy? Well, for starters, they dominate the e-commerce space. With the most visited online marketplace in the world, they accounted for 38% of all digital retail sales in the US last year. And with global e-commerce spending expected to increase 13% annually, reaching $15 trillion by 2030 according to Amico Research, Amazon is positioned to be a major winner in the years ahead. So, take a page out of Warren Buffett's book and invest in Amazon for long-term growth potential. Get excited, because up next we have Google, ticker symbol GOOG, and it's looking like a solid pick for investors. While Berkshire Hathaway doesn't have a direct stake in Alphabet, its subsidiary New England Asset Management started a position in the company in the fourth quarter of 2022, and we all know that if Buffett owns those shares, they're likely to be winners. Alphabet is best known for Google, which dominates the search engine market with over 92% market share. And let's not forget about YouTube, the most popular streaming service in the US. By leveraging these popular content platforms, Alphabet has also become a dominant force in the digital ad industry. With Google Cloud gaining momentum, the company is upgrading its products more quickly than any other vendor, according to Gartner. While Alphabet reported lackluster financial results in the fourth quarter, that can be attributed to economic headwinds. And even though the company is losing market share in its core advertising business to rivals like Amazon and The Trade Desk, it still accounts for 28% of global digital ad spending. That's a solid position to be in, especially considering that global digital ad spending is forecast to grow at 9% annually through 2030. Up next we have AbbVie. This pharmaceutical company, ticker symbol ABBV, has been on a roll since splitting from Abbott Laboratories, raising its dividends by a whopping 270%. But that's not all. AbbVie is also a member of the elite Dividend Kings group, thanks to Abbott's 51 consecutive years of increasing dividend payouts. Now, the big question on investors' minds is whether AbbVie can continue this trend of rewarding shareholders with increasing dividends, especially with its major cash cow, Hum IRA, losing US patent exclusivity this year. But fear not, AbbVie has planned ahead and diversified its product lineup across various areas like oncology, neuroscience, eye disease, and aesthetics. The company has even anticipated Humira's decline and expects its immunology lineup to pick up the slack, with roughly 10 approvals or regulatory submissions expected this year alone. All of this means that AbbVie can still deliver solid revenue and earnings growth even without Hum IRA, ensuring that shareholders continue to receive those increasing dividends. And with a very conservative cash payout ratio of just 41%, AbbVie remains an attractive pick for investors seeking a reliable cash cow for passive income or otherwise. So go ahead and add AbbVie to your watch list, you won't be disappointed. Next up for dividend stocks, we have Gilead Sciences, ticker symbol GILD, a cash-rich company with exciting growth opportunities. With operating profits and robust free cash flow, Gilead is capable of not only supporting its dividend payouts but also investing in business expansion. Last year, the company brought in $8.3 billion in free cash flow, with more than enough left over to invest in its pipeline, which currently boasts 59 clinical stage programs. Gilead is particularly focused on diversifying its product mix, which centers around HIV treatments that accounted for 63% of its $27.3 billion revenue last year. With dozens of oncology trials ongoing, Gilead is well positioned to continue growing its operations. Gilead's recent FDA approval of Trodelvy, a breast cancer drug, is a particularly exciting growth catalyst. It's the drug's third indication, and analysts predict it could generate $955 million in sales this year. Additionally, Sunlenca, a twice-yearly injectable for people with multi-drug-resistant HIV, obtained FDA approval last year and could bring in up to $1.5 billion in annual revenue at its peak. With its tremendous cash flow, Gilead has excellent growth potential. For long-term investors looking for a solid dividend stock, Gilead is an excellent choice. Next up we have Vertex Pharmaceuticals, ticker symbol VRTX, is a stock that should be on every investor's radar. This biotech giant has an impressive track record of generating enormous amounts of free cash flow, with 2022 bringing in over $3.9 billion. And that's not all, the company's cash pile has grown to a whopping $10.8 billion, up from $7.5 billion the previous year. Vertex's cystic fibrosis (CF) franchise is the primary reason behind its cash cow status. The company currently holds the exclusive rights to 4 CF therapies, making it a monopoly in this rare genetic disease space. And, with 8 programs in mid to late stage development, Vertex's pipeline is brimming with opportunities. CEO Reshma Kewalramani stated that the company hopes to launch therapies targeting 5 different disease areas in the next 5 years, each representing a multi-billion-dollar market opportunity. But Vertex's growth potential doesn't stop there. The company, along with its partner CRISPR Therapeutics, is poised to secure regulatory approvals for Exa-cel, a treatment for 2 rare blood disorders, sickle cell disease and beta thalassemia, as early as this year. If successful, Vertex could soon be raking in even more cash, making it a top pick for investors looking to capitalize on biotech's growth potential. Lastly, get ready to learn about Corteva, ticker symbol CTVA. Despite its current expensive stock valuation, Wall Street analysts are predicting a substantial increase in earnings and free cash flow for the company. In fact, Corteva's EBITDA margin is expected to expand by 2025, leading to impressive free cash flow growth. At present, Corteva has a market cap of $44.3 billion and an enterprise value of $42.2 billion, with an EV/EBITDA multiple of 9.8 times based on 2025 EBITDA estimates. From a free cash flow perspective, the stock is trading at 17 times its 2025 FCF estimates. While the consensus estimate of $4.3 billion in EBITDA in 2025 falls slightly below management's target of $4.4 billion, both figures suggest double-digit annual earnings growth over the medium term. Corteva was formed from the Dow-DuPont merger and has faced some challenges in the past. However, with new CEO Chuck Magro at the helm, the company has laid out a plan for significant earnings improvement. Management plans to generate $400 million in annual savings by 2025 and refocus on core products and must-win countries. They also intend to ramp up R&D spending and expand sales of products under their technology, which should reduce net royalty payments by $250 million by 2025. Corteva has already made progress with its Enlist system, which now commands a 45% share of U.S. soybean acreage, up from around 35% in 2021. With agriculture seeing a strong year for crop prices, the company is poised for growth. By 2025, Corteva is expected to reduce net royalty payments and generate margin expansion, while introducing new products and growing sales of seeds and crop protection systems under its technology. All in all, Corteva's growth story to 2025 is an impressive one, making it a company to watch for potential investors.